Welcome back to Over the Horizon, a Bitcoin podcast. Today I'm here with Alex Thorn, head of Firmwide Research at Galaxy. Alex, how's it going, man?
It's good, Joe. Good to see you, man. Thanks for having me on.
Yeah, absolutely. It was good to see you in New York. First things first, I want to talk about the market. Gold's ripping people's faces off. Unfortunately, over the last 2 days, it has plummeted 9%, proving that it is way too volatile to be a store of value. So, what on earth is going on? Plenty of things happening. Basically, everything is selling off now, including gold. The only thing that's catching a sustained bid, at least over the last week here, if I'm looking at my chart, is US Treasuries. But basically, everybody's afraid. What's going on?
Yeah, oil I see also up a bit today. I mean, granted, in the 50s though, not a big story. Well, look, I mean, on the gold side, it's pretty clear, right? I mean, this still is the debasement trade, and it isn't. I wouldn't even say it's purely the debasement trade; it's the anti-U.S. government trade, right? Like, and we looked at this, we did the timing analysis on gold price moves, and it's all offshore. Like, it's not getting bid during U.S. hours; it's getting bid during American and Asian, European and Asian hours. Which makes sense because it's foreign central banks and large, sovereign wealth funds most likely diversifying out of U.S. exposure, right? It's a part of that long-term trend, and we know this, right? We know that foreign central banks are net reducing their treasury exposure, right? And they're adding gold. And you have to ask yourself, why is that? It's pretty clear, right? Pretty clear reason, right? They want less exposure to the U.S. and they want something that's scarce and non-sovereign. I think one of the stories there, obviously, and I think it's caused some consternation among Bitcoiners and some sort of curiosity among the sort of TradFi macro types is why isn't Bitcoin trading like gold, right? And, answer's pretty straightforward. Fundamentally, it's very similar, and a lot of us own it for a long-term debasement hedge, but, the markets move on the margins, and the margins are trading Bitcoin like risk still. That's just always been the case. It's never really fully gone into a true gold-like trading. But it will, right? I mean, as you think about we're orange pilling registered investment advisors and these long-term sort of passive investor types. BlackRock's chilling the digital gold narrative, right? Like Fidelity. This is how they talk about it. They're not talking about Bitcoin as like a risk trade. So as more goes into their hands, you'll see it still. It will, I'm very confident, trade a lot more like a risk-off, non-sovereign scarcity hedge asset in the future, but today, I think people are very concerned about the Fed and the rock between the rock and the hard place. Unemployment looks a little squishy, and inflation looks a little sticky. And people are wondering how durable the AI CapEx boom is going to be, which has driven most of the market this year. I think it's just sort of natural anxiety about it's kind of the wall of worry. I still think this is one of the worries in the wall that you climb. I think still. I don't yet think it's more existential than that for the bull market yet. I don't quite. I know some people do. Is the bubble popped or whatever? I don't think we're quite there yet. So I'm not that concerned for the sort of integrity of the structural bull market that we've been in.
I tend to agree. Lots of moving parts. The Bitcoin is digital gold narrative. It used to be a niche talking point. It used to be like you, me, maybe 100, 200 other people on Twitter banging the drum saying Bitcoin's monetary properties allow it to trade like gold. The market trades like the NASDAQ. In my mental model, that wasn't going to change until Bitcoin approached the size of gold. Let's say it was like 50, 60% gold parity. Then you would start to see it change at the margins. I didn't think what's happening now, where you mentioned BlackRock and Fidelity. We also have JP Morgan saying that it's part of the same trade as gold, saying that it's undervalued on a risk capital basis. Deutsche Bank also put out a report, not sure if you saw it, that said Bitcoin is not dissimilar from gold in the is declining volatility, increased institutional adoption, and that it would arrive on central bank balance sheets in the form of FX reserves by 2030. I think that's an aggressive target. But the fact that these are headlines that are coming out of some of the world's largest banks and the world's largest asset managers, I think that's enough to tell me that the timeline on which Bitcoin will loosen its cross-asset correlations with risk and become closer to gold is closer than ever. So I agree on that point. And you call it a wall of worry. That is what it's called. I wrote a piece called it's the cloud of uncertainty. It's all these different factors at play. Since January, right? Slightly pre-Trump inauguration, we had this secular trend of dollar weakness. Gold just absolutely rocketed in that environment because the dollar weakness was due to divestment from the United States, lack of confidence in the U.S. Treasuries. Bitcoin also did decently well in that environment, but it's not the risk-off asset that gold is. So I tend to agree with you there. So in your mind, and then we'll talk about AI CapEx, because it is such a massive component of this market. You see names like IREN and Cypher just exploding over the last year. Mike Alfred all over the timeline posting photos of his wine bottles and things like that. It's a huge percentage of US GDP now. What will it take to actually surmount this wall of worry for this cloud of uncertainty to abate? I have my ideas. FOMC meeting coming up next week, Trump G meeting coming the day before Halloween. A couple of things on the horizon, pun intended, name the podcast. But in your mind, what do you think needs to happen for this uncertainty to abate and ideally these conditions to resume the bull market?
Yeah, well, October was in great shape to start the month, right? Bitcoin made a new all-time high around 100K. Equities made all-time highs, and then it was the sort of a new tariff tantrum 2.0 on that Friday, October 10th, with those statements from Trump that he might add 100% tariffs on China that caused that. So I think quite simply an abatement of the tariff war between the U.S. and China, some resolution, I think would sort of set us right back on course in risk markets, generally speaking. I guess we don't have that much history to look at, but history looks like that's pretty likely, right? I mean, Trump likes to come out really strong and he eventually, capitulates or compromises a bit. I think neither the U.S. nor China really do want a protracted, bloody trade war. I think they don't, right? They're both posturing. I think it's pretty good bet that there'll be some resolution to this that's, much less aggressive than 100% tariffs, I think. Pretty likely. Now, and so I think, when that happens, you're likely to see mostly a resumption of the market trends we've seen throughout the year, which has been, in Bitcoin sort of, it looks volatile. If you realize we went from like 100 to 10 to then 74 to then 126 to now 108, like that looks volatile. It's actually, as you pointed out, it's declining realized volatility quite notably over time. The reality is it's been a mostly slow grind up. Like if you sort of smooth it out, we're even at 108 as we record this right on October 22nd, like, that's up slightly year to date, right? It depends on when you want to really start it. But like, we at the Michael Saylor's 100K party, we were actually trading around like 93. And so like to open the year, like on New Year's Eve. So like, you're up slightly more, I think, than the S&P, but you're mostly the same. So I think a resolution in the near term of the Trump-Xi meeting, whether it's through the meeting or an announcement or whatever, will ultimately sort of be that near-term catalyst that sort of brings markets back to the general uptrend. So I think that's the simplest answer right now. I don't think, I think the Fed and what happens with rates. I mean, you're likely.
The reason I say it is because the Fed always drives blind, but now the government's shut down, and so you have Steve Moran going out and saying, well, the Fed actually makes its decisions based on forecasts, and then the reporter said, no, actually, you make your decisions based on data, sir, and he's like, well, you're right, and so now they don't have any data to make decisions on, so that's why I brought that up. But the reason I pulled this chart up is because you could see here, tariff scare happened like right here. April 2nd, everything tanked. It was a much more truncated tariff scare. This is back in April when Trump first unveiled the reciprocal tariff regime. But then Bitcoin resumed, up for the remainder of the year. In my mind, the totality of macro conditions, like, the Fed's easing. It's easing into an economy that's, still has some steam underneath it. You talk about unemployment kind of being on the rocks, inflation being a little bit sticky. That's not helped by the fact that we have no data. But I think the end of balance sheet contraction and rates coming in, once this resolution happens between China and the United States, as you mentioned, they're just posturing, I tend to think that Bitcoin is just going to do what it did after the last tariff scare went away over here in April, what you see here.
Yeah, I mean, I agree. I still think, at the beginning of the year, I was calling for 150 BTC USD and then 185 in Q4. I'm about to put something out like, most people haven't adjusted. I am going to materially draw down that prediction to maybe like 130 by EOY. But I mean, so I don't know if it looks like a rip from 74 to, 110 like it did following that. But I do agree with you. I think you will resume an uptrend in most assets, including Bitcoin, once we just get some resolution. Bitcoin looking pretty stable, to be honest, compared to other stuff. It's not really a freak out. And as we know, a lot of that drawdown there is sort of like market microstructure driven from the sort of leverage washout on October 10th that followed the tariff announcement with China. So I don't think it's sort of like, it's not in a structural downtrend. I think it's sort of crab and when things change, it will change. And I do think tariffs are the main thing. I agree that I don't think that the Fed cut is really that big of an issue at the moment. I do think, if, we're reining in tightening or ending tightening, it sounds like what Jay Powell was saying a week or two ago, like, yeah, you are going to get into printing effectively with lowering rates and possibly expanding the balance sheet. that would be supportive. I don't think the next meetings are super important, except to save for the fact, as you said, that the Bureau of Labor Statistics data is delayed or non-existent now, but the Fed has its own data. So actually, it'll be very important and interesting to see the Fed's commentary around that, because they'll be doing so for the first time in a long time when theirs is the only commentary and data that we really get. So I am looking forward to see it when it comes to this, squishiness of employment versus the stickiness of inflation. They're going to have data. We don't have data, but they'll share the data. People don't know this. The Fed is not a government agency, and it is not funded by Congress. They literally have their own funding. So when the president was lambasting Jay Powell for the expense of redoing the Federal Reserve's headquarters in Washington, he didn't make clear, but Congress doesn't pay for that. The Fed prints its own money. The Fed has its own budget. Like they're not paid for by Congress. So similarly, they have their own data. So maybe we'll get some info there.
Absolutely, yeah. For the very first time, markets will have less data moving into a Fed meeting than the Fed will, right? We have all of this great data that impacts trade decisions. So, even though the decision won't matter all that much, the speech and the context that they provide for the decision, I think, will matter quite a bit. But yeah, in my mind, it's not Bitcoin native factors that drove Bitcoin to end the October. I think in the first 6-7 days, we doubled the entire month of September all the way up to 126. It wasn't Bitcoin native factors that drove it back down, right? It was the tariff scare that wiped out a lot of leverage from other areas of the market. Bitcoin was impacted. Now it hasn't been able to find its legs because of the tariff scare, the wall of worry. Let's shift gears here. Let's talk about the AI CapEx boom. Obviously, an insane amount of money flowing into AI companies. Data center construction is just ripping. In the first half of 2025, AI CapEx was 1.1% of GDP growth in the United States. Estimates as of just a couple of days ago, last week, are that $375 billion worth of CapEx is going to happen in the United States prior to the end of the year. We're already within just a couple $billion of that mark. It's expected to expand even further next year. How is that impacting the market? How does that play into your broader views of kind of the overall market structure at this point in time?
Yeah, and if you look at the market as almost many year, I mean, we've seen a little bit more dispersion across broader tail of equities, but of course driven heavily by like the Mag 7, right? And so these are the companies leading this spend, right? It's the Microsofts and the Nvidias and the, on the private side, the OpenAIs, and the Googles. So to me, the question, I think it's very important to directly answer your question. I think it's the most important trend in markets, right? That's why you constantly see this sort of anxiety and people asking. I mean, Paul Tudor Jones, I think, said a couple weeks ago that it feels exactly like 1999. He said, quote, all the ingredients are in place for some kind of blow off. He was basically saying it's possible we're in a bubble in AI and AI CapEx, this similar way that we were in, September, October of 1999 in a dot-com bubble. He said the dot-com bubble ultimately burst in March 2020 or topped, but there were huge gains to be had then. And so his thesis is that we might be similarly in the sort of months preceding what is ultimately a blow-off top led by AI spending and CapEx, but that you're not meant to be uninvested, but you're meant to keep light feet and be ready to sort of hit the exit like when you see the structure crack. That's his thesis. I don't believe that. I think it's not a bad thesis. He's obviously, a storied and legendary investor who was around and traded that dot-com bubble as well. So I respect that idea, but I started thinking about this and whether or not is it really like the dot-com bubble? Is it like fundamentally similar, right? Obviously, it's a technology-driven investment trend. In the sort of broadest sense, it's similar. But when I really was looking into and I mean, I'm old enough to have been, not a little kid in the 90s. I mean, I was a kid, but I was around, and I was I was in middle school in the 90s and high school in the early 2000s, right? So I remember a little bit, but I certainly wasn't an investor. So I was looking back and reading about this, and what I found is that it really wasn't the same. It wasn't being promoted in the same way that by the government that AI is being promoted today. And crucially, if you go back and read there's these key speeches by then President Clinton, later and before that even H.W. Bush a little bit about the internet, and it was really promoted by the government as a tool for economic equality and for information symmetry, and all the stuff was about how the internet would be a great educational tool. It wasn't really promoted even as an economic driver for the American economy at the time. Everything was about like the E-rate initiative, which was about connecting schools and libraries, right? Whereas if you look at how, and if you look at how the U.S. government and other global governments are promoting AI, it's done so much more with geopolitical and national security language. And I think there is a view that like whichever nation gets to artificial general intelligence or some kind of AI super intelligence or computer could be the global power for decades to come, right? It's seen as very existential from a geopolitical standpoint, and the spending backs that up. So like if you compare like the even if we include E-rate, which is this actual giant almost $2.5 billion program from the 90s to connect all those schools and libraries, it wasn't funded by government. It was funded by fees that the telecom industry funded by private industry. That even if we include that, which wasn't part of the federal budget, the investment would still have equaled about 0.1 to 0.2% of annual federal spending, or only 0.003 of GDP. In contrast, in 2025, the federal government itself is spending $3.3 billion a year only on AI R&D, plus another $45 billion in semis and infrastructure incentives under the CHIPS Act. That's 0.7% of the federal budget, or 0.15 to 0.2% of GDP. So 7x the annual spend on than the government spent in the 90s per year on internet growth is being spent on AI in 25. And then, like I said, I think it's much more likely that the AI, the government's sort of stance on AI infrastructure build, incentivization, energy hookups, right? Like semiconductor manufacture will look a lot more ultimately like the Manhattan Project or the space race than the sort of like, let's help like average people like get more information by connecting their library to the internet. So I think actually not only might we not be in the early stages of a bubble or like sort of in the late stages that could lead to a blow off top in a few months, as Paul Tudor Jones is suggesting, we actually might be nowhere close to the top. It actually could be orders of magnitude bigger. I still think is a possibility. And that's really now the wall of worry that we're talking about in my mind. Like, is 370 something billion that you said has been invested, is that a lot, or is there a lot more yet to come? Like, that's the question. And I think it's possibly as likely that there's a lot more to come as it is that we're close to the end of it. Like, so maybe it's 50-50. But I think that I wanted to widen the spectrum here of what actually could be possible. Like, we might not, if it is a new space race or a Manhattan Project, we might be nowhere close to the finish of the AI CapEx boom.
Absolutely. Yeah. It's always fun when the balance of risks is evenly distributed, right? This could very well be the next Manhattan Project. This also could, in all likelihood, be the dot-com bubble. I
That's
think
right.
it ultimately for me, it's a question of continuation. If we see this moving into 2026, if these things scale out, if revenues can keep up with the amount of capex, those will be the key indicators for me as to whether or not this is something that's going to be a quote unquote bubble and that has a blow off top and then a huge deflation, or something that's here to stay, right? And for me, what you pointed to with government spending, a much higher proportion of government spending today on AI relative to what was spent during the dot-com bubble, that indicates to me that this is not a politically protected asset, but it's something that the government views a long-term utility and that it's willing to foot the bill for on a lot of these projects because we want to get there prior to China. You didn't hear that during the dot-com bubble. You didn't
That's
hear that,
right.
oh my goodness, we need to create these, we need to connect these libraries before China does or before Russia does. Whoever
Right.
the de facto enemy number one was at the time. But today you're hearing that it's being actually viewed as a digital arms race. And so comparing that to, the arms races of yore, I think that's a much better analogy than comparing it to the dot-com bubble.
Yeah, and we're not, keep in mind the demand side of the story is still so early as well. The US
Exactly.
government's not taking this geopolitical strategic view because we all need help with the chatbot, okay? Like, or the chatbots are going to change the world, right? I think and similarly, by the way, on the sort of risk side, you haven't seen the like employment take the hit that we think AI efficiency might ultimately bring to labor yet, because it's not really truly widely adopted yet. I mean, the things that we think it can be truly revolutionary for AI, the use of AI, such as like medical research or diagnosis, right? Like things like giant financial use cases, they're not really quite yet deployed. So, and do we know? I mean, I think there's also a little bit of worry, right? I saw a study that was something like a bunch of top companies, like Fortune 500 companies or some giant cohort of companies, or something like, 90% of their AI pilots like fail to achieve anything useful, but that's okay. Like, to me, that sort of hit rate is like what innovation is about. I still firmly believe we have not seen the top at all in AI, the application of AIs impact on the economy. Like, so we're still just building all this stuff out, but most of us are just like making images or getting some vibe coding assistance from ChatGPT. Like, surely there's a lot more demand to come, and that the sort of bull case on what AI will actually bring to economies hasn't remotely yet played out, and is deeply in the minds of the world's governments. It's not, again, connecting libraries or even just vibe coding or making Midjourney images. Like, everyone thinks there's something much more impactful yet to come. So I think the demand side is, it would only take like one like shock new use to just like totally upend the way people are thinking about AI.
Absolutely. And that would ultimately justify all of the spending and allow us to hit escape velocity, if you will, in terms of AI and its staying power. The applications that the investment is for down the line are for the things you talk about, are for medical research, military application, right? We have not seen widespread use or any adoption in the United States of AI in military applications. And also automation, right? As far as it goes stateside, it hasn't been widely applied to automation at all. Those three things will have massive staying power and huge economic implications. We're just not there yet, right? So it's a question of whether or not we get there with the current technology, or whether or not we have a blow off top, a reset, and then these things build over the next decade plus. Absolutely fascinating to keep track of. I want to switch gears here. I want to talk about digital asset treasuries, DATs. Obviously, they've had a bit of a crazy year. So I want to get your take on that, and then I want to get your take on what it's sort of like to be almost. We were talking about this earlier, kind of like the old guard, and you have a certain way of phrasing it, but the old guard still kind of roaming around Wall Street, talking about Bitcoin and its utility, selling it to asset managers. I want to talk about kind of those things in order, because for me, they're two sides of the same coin.
Yeah. Well, the DATs are still a big theme. I think, obviously, I would say the initial excitement around their stocks has obviously abated. If you look at basically any DAT price chart, they all look quite similar, which is the giant anticipatory spike up, and then basically have bled all, since midsummer, have just all of them bled. And, that's the equity pricing of their shares, right? I think many of them succeeded in raising capital and now are sitting on a pile of coins, right? So like where I don't know where those stocks are going to trade, but you have to acknowledge that they've obviously come down significantly from sort of the initial excitement around what we were calling, humorously, as in our Vibe Capital Management committee meetings, as paper Bitcoin summer, right? So paper Bitcoin summer is obviously, since it was, briefly good in May, June, July, has not felt good for investors in many of those equities since then. So for DATs, you're kind of like, what does phase two look like? Surely these companies sitting on giant piles of coins, whether it's Bitcoin or others, Solana and Ethereum DATs, some of whom are massive in terms of their, pile of assets in their treasury. Surely, like, this isn't the end of the story, and I don't believe it is. So it's kind of like trying to feel out what like stage two for these new DATs will look like, like which will adopt innovative business models or new types of capital strategies or what, right? And I am of the belief that, strategy and some others may be able to sort of focus their entire energy around acquisition strategy. Most of the longer tail will need to find some kind of business opportunity to anchor to. They won't be big enough to create the fixed income preferred securities that Michael Saylor has created, or tap the convert markets, or dilute through at the money offerings the way a giant like a strategy can. And so they'll have to figure out something more to do. That's my view. So I think there's more yet to play out. But I mean, from a sort of narrative standpoint, like, we're at the Sailors hosting a 100K party to start the year. People are euphoric about the change in administration and what it means for digital asset policy and how that's supportive for Bitcoin. Then you come into March and we have the SBR announcement, which is historic, the executive order, right? It was briefly going to be a giant like altcoin basket, but then somehow it all just worked out like sort of perfectly in what Bitcoiners wanted from a policy standpoint, which was Bitcoin in buy or hold only mode, and altcoins in hold or sell only mode, actually prohibited from acquiring coins. Anyway, then you had the presidential working group report. Everyone was excited for that to come out in July, and that's now come out. And the SBR hasn't really fully materialized in any sort of public official way. They certainly haven't acquired Bitcoin. So that narrative and then you had the DAT narrative really pick up in like April, May, June. Like I talked about, like that's kind of abated now. So we're kind of finding ourselves in this like then you have the debasement trade as Bloomberg was calling it, but gold really taking the lead there and Bitcoin not so much. So you're sort of like, what is the Bitcoin narrative, right? Like what is going to get Bitcoin out of these doldrums and sort of make it actually, go into true price discovery? Because even the all-time highs that we've had this year are mostly just like slightly above all-time high. You get to 100, then you get to like 105. You're like, oh, new all-time high. Then you get to like 107. You're like, oh, right, gets to 110, chops for a long time. Get to one eventually in the 20s. Okay, like a little bit more. You get to 125. Then we have a slight new all-time high at the beginning of October, 126, right? But it's like in most like prior Bitcoin bull markets, when Bitcoin crosses that prior all-time high, you usually got a pretty material leg up, right? And we kind of, when we've made those new all-time highs this year, they've been sort of like grinding higher all-time highs and not sort of typical. So it's really hard as a long-time Bitcoin price watcher. I mean, I've got to admit, I watched the line. I've been watching the Bitcoin line on my screen for a very long time. And this feels different, right? And so you're sort of like, and so there's a combination of sort of malaise from the narratives that drove us throughout the year. Sort of like we're sort of hunting for a new narrative. You called it the cloud of, what, confusion, obscurity?
A lot of uncertainty, yeah.
Cloud of uncertainty. I mean, we're kind of in that, like, we're feeling around in the dark here for like where, Bitcoin's not trading like gold, but gold's been ripping. It's not dumping. It's, Bitcoin crashes to 108. I mean, it's like, it's a good price, or whatever. It seems like a relatively stable, we could go lower if everything else goes lower, but it's not existentially at risk, right? You've seen massive distribution from whales this year, but that distribution's going into things like passive ETF buyers and other institutions and governments in some cases now, or sovereign. I mean, so you're kind of feeling relatively stable, but unsure sort of what drives us higher. And my guess is that it's a resolution like we talked about of, some tariff uncertainty actually just makes us grind higher again. I don't know maybe we won't see the massive uplifts that we used to see when prior all-time highs are. Maybe we're in a new regime. And in some ways it does feel like that.
It does. It's funny, Alex, when you said massive uplifts, suddenly the sun burst through the windows, and I think anybody viewing could see that the backdrop went white. Really incredible. Maybe that's an
Maybe
omen
that's a
for
sign.
Maybe it is. I'm going to share my screen here. This is a chart of Bitcoin's 90-day realized volatility. To your point, in prior cycles, you could take a look here. Bitcoin's 90-day realized volatility rose to an index value of almost 117 at the 2017 top. During 2021, when we hit our double top, a 90-day realized volatility of, around 80. We're at 29 right now, right? So we're at an all-time low as far as volatility is concerned. Bitcoin has generally been this extremely volatile asset. You'll note the behavior, obviously being a longtime Bitcoin line watcher, in the
We love the
lead up
line.
to the line's fantastic. It's burned into my brain. I can close my eyes and
Yes.
see the candles.
Yes.
In cycles prior, I mean, Bitcoin's price was all over the place in the 2 years leading up to its bull run. It's kind of this 18-month period, this 12-month period where Bitcoin, basically the entire bull market happens. It used to be much choppier. Now we've basically just taken stairs higher. And once again, basically for the entire year of 2025, including, this, if you measure it from April, we've done quite well. But if you take a look from January, we're essentially only $10,000 higher than when we started the year. And so it's kind of, we're trying to grapple with all these narratives and make sense of it all, because whether it was following Global M2, of which I committed many a chart crime in posting that, whether it was, the October narrative, whether it was moving into September, Bitcoin will start to do well. All of these narratives have fallen on their face. Bitcoin treasury companies, every single one, apart from 3 who are running the strategy in the United States, are trading below the value of their Bitcoin. And so, like, in my mind, maybe all it will take for Bitcoin to move higher is obviously a resolution of, the U.S.-China trade relations, but maybe every single one of these narratives needs to be ground to dust in order for Bitcoin to finally ascend higher. I think that Bitcoin's moving out of needing Bitcoin native narratives in order to succeed, and moving into a world where, because the dominant buyer is now people who are passively buying through these ETFs, it's more of a macro trade than anything. It's being more tightly core. It's moving away from being impacted by Bitcoin native events and moving much further into, now that it's a really deep and liquid asset, being impacted solely by or more than ever by the macro regime. It's tough to make sense of this all.
Yeah, I totally agree with that. And I think another sort of data point or discussion point that underlies that the new regime as well. And you're right. I mean, when you zoom back out on that price chart, it just does not look the same as like a bubble driven up and down and up and down, like at all. I mean, that's a giant. I mean, since mid 22, since the FTX bottom, or I guess that'll be the end of 22 in November 22. I mean, that's just a pretty consistent trend, right? Like it's just grinding higher for, I mean, 3 years basically next month, right? And so I think one of the interesting discussion points to raise is the distribution from OG whales into the passive bid, right? Like if you whether you look at things like Coindays Destroyed or these various other, sort of Glassnode-y, Willy Woo style metrics, James Check metrics, they show significant distribution from old hands to new hands. That's what's been causing some of the sort of headwind to Bitcoin price and resistance has been significant, sales by longtime holders. Now, I think that's good. It's also inevitable. I mean, it's both a thing you have to reckon with and just be okay with because it's a free market and that's great. But it's also healthy, right? We want a wider distribution of Bitcoin ownership, and everybody has a clearing price for everything. I believe that that's true in markets. Like, I don't want to sell my Bitcoin, but surely there's a price when everyone might act in the market, and that's what free markets do is they hunt that price, right? That's what an efficient market does, right? It tries to find what that price is for every asset, so I think we want to have that distribution. I think we might look at like some point, maybe it's the 100K feels like a pretty reasonable place to sort of put it. There were, people that never thought it would hit 1,000 and then, or 10,000 or 100,000. Clearly, a lot of longtime holders have been sort of taking gains. So maybe we delineate there the pre-100 Bitcoin world versus the post-100K Bitcoin world. I think it's going to look a lot different. I mean, it's no longer the early cypherpunk adopter who was able to get 100 or 1,000 bagger out of it. It's now, like you said, more of a macro asset. It's going to be widely owned. I mean, one of the big stories of the last few weeks of institutional adoption is the Morgan Stanley advisors are now able to recommend, I think, up to a 4% allocation through Bitcoin ETFs in every
16,000
advisory
advisors
portfolio
globally and $8.2 trillion across the portfolios that they advise.
It's one of the largest so-called wirehouses in the world. It's like one of the top four, right? It's like what UBS and Merrill and Morgan Stanley and one other that I'm forgetting that literally, I mean, manage trillions in wealth, right? Like I think in the end, these advisory, the wealth management platforms. This was a key bull thesis of mine and many in 2023 when we were anticipating the approval of the Bitcoin ETFs was this segment in particular, because this is a segment that can't access Bitcoin exposure and really needs something like the ETFs to do it. And just finally, like last week, Morgan Stanley has, I think, effectively taken their legion of RIAs, registered investment advisors, wealth platform advisors off the leash and said, you know what, you actually can recommend Bitcoin exposure broadly, right? It's like that only just now happened. So if you look at, the era of Wences Casares versus the era of Morgan Stanley advisors, like to me, that's a very binary, like we're sort of the era of the early Bitcoin adopter is now finally, I think, fully come to an end. And now you're in, whatever that stage is, you're no longer early. I don't believe, maybe we're early in the long-term story of Bitcoin and its price. But again, I don't think from a narrative, depends just wherever you put that final bullish number, you could say you're early. But I mean, we are not early in the adoption of Bitcoin. In fact, now we're becoming quite sophisticated. So you're going to see all the big custody banks are going to custody Bitcoin. In fact, 3 of the 4 have announced or have acted, right? So it's Bank of New York, BNY Mellon, Bank of New York, State Street, JP Morgan, and Citi are the 4 largest custody banks in the world. 3 of them have either already built custody in the case of BNY and have launched it, or have announced that they will launch it next year. It's only JP that's holding out, saying they have no near-term plans to do it. But again, you got 3 of the 4 of the biggest custody banks. You're going to see all the wirehouses turn. I mean, this is going to be a widely owned macro asset in everybody's portfolio. But we still haven't even gotten to that yet. So to me, it's those types of stories that will start to define the next era of Bitcoin. Not so much the, early cypherpunk that mined Bitcoin or had 10,000 Bitcoin. I mean, and you've seen that in the distribution. Frankly, there aren't going to be many of those left, I think, after some period of time.
Fully agree. Yeah, no, the narratives have shifted. Bitcoin is becoming a widely adopted, institutionally held asset, where I believe the primary way people interact with Bitcoin is through their brokerage account or through their bank, right? Through a formal custody solution offered at their bank. I've received flack for this in the past. Particularly, this is something I came around to over the year, but it's just the direction we're headed, and you're witnessing that in on-chain behavior. 100 to 110, the more time spent here, it's a huge psychological level, and we've seen on-chain distributions from people holding for 155 days or more, all the way out to 12, 13, 14, 15 years, have been at record highs at this level, because they're at the level where for them, the dollar amount has been greatly surpassed. To them, what's the difference between having a $100 million net worth and a $120 million net worth, right? More money than I could ever spend, I'm going to distribute my coins. It genuinely doesn't matter to them. And so we're moving from that into this new era of Bitcoin. I couldn't have said it better myself. Very well said. In that vein, as we round this out, we've got 7 minutes left. A couple of other things you wanted to talk about. We could take it whatever direction you want. We want to talk about Bitcoin late stage startups pre-IPO, not and are there any left out there? A few come to mind. And also knots versus core, whatever you want to talk about. Let's do it.
Yeah, I mean, look, in the sort of private market for these companies, one of the things that's always interested me, there's not really quite a large Bitcoin company. There's not, you've got, historically speaking, I would say maybe outside of the Bitcoin miners, and historically, we used to say for a long time that the only companies that actually had ever been public in crypto were crypto exchanges or Bitcoin miners, and that was true. Now, that's not true anymore. You've got Galaxy and Circle and, all these others that are going public, right, in crypto. But there's no large, truly Bitcoin company. I guess maybe over the years, the largest maybe was Blockstream, that was sort of a Bitcoin-only company. Again, of course, private. Maybe you've got sort of big traditional company or fintech companies like Cash App that have significant Bitcoin businesses, or even, Robinhood looks more like a sort of a general exchange, but there's a lot of activity there. On the private side, it's not. And on the private side, if I had to gander, maybe like Strike and River are the two biggest, sort of exchange, Bitcoin brokerages, but they're not quite that big. And so I really would love to see some big, maybe you roll up Bitcoin companies together, or some merger occurs, or I'd love to see I think on the Bitcoin sort of only side, it's maybe Fold is the only major publicly traded Bitcoin focused company, but it's not that big, right? I mean, so this is one thing that's interesting to me. You have, over a decade of venture-backed startups in the Bitcoin world. There are many of them. Will we see a sort of massive Bitcoin company emerge, whether private or could go public? It's just a question I have. Obviously, there's product market fit for things like crypto exchanges being public, general, broad-based crypto exchanges. You've now got a little bit of a precedent now for a stablecoin issuer to be valued by public markets. You've got Galaxy, we're a hybrid company, but on the digital asset side, we're sort of a broad-based brokerage and advisory, firm. There's some acceptance of that in the market, but where is the market's acceptance and demand for a large Bitcoin company? I continue to wait to see that, and wonder. I don't have a strong thesis on whether we will or won't, but I wonder if we will. It feels like sort of a structural component missing in the public markets that are becoming generally more diverse in terms of what you can, as an investor, and get exposure through public equities to. Not that easy to get direct public exposure to a Bitcoin company. Obviously, you've got the treasury companies, but the vast majority of them really just have acquisition strategies. They're not offering Bitcoin products and services. So I do wonder about that. I think that's something to watch for in the next year.
Yeah, no, I totally agree. I think you mentioned there are several examples of Bitcoin companies in the private markets that do a handful of things, but there isn't one in my mind. I think the way that you get a Bitcoin company public, potentially over the next year, 2 years, 3 years, you see a roll up, you see a merger between 1, 2, maybe even 3 of these broader Bitcoin financial services firms to create one large, extremely large company that kind of, combines all of the functions of them. That could be the way that it happens. But it seems like, you mentioned venture-backed startups like Thea and Horizon being 2 examples of those. We have a handful of functions that we do across those 2 companies. And then, you have River. They have a handful of functions that they perform, Strike, but they're all separate companies. Whereas with these publicly traded companies, you mentioned Robinhood, great example, they have many different corners of their business all folded into one entity. That's kind of what's lacking in Bitcoin. Is that you have several different companies for functions that can be found in one company that's traded publicly.
It feels like certainly Bitcoin is a massive, near, I don't know what it's trading at the exact moment, but call it a $2 trillion asset. widely owned by millions of people around the world, both retail and small investors, and in the government, all the way up to governments and stuff. I mean, everyone. There are a lot of people everywhere that love and own Bitcoin, and it's worth $2 trillion. It just seems to me like surely there's room for like a giant Bitcoin focused conglomerate, right? Like, or huge company. And it's just kind of surprising to me that you haven't seen it. Obviously we know, there's a lot of business in sort of a more diversified, crypto something like what Coinbase does with massive acquisitions. Like they're able to gobble up huge swaths of the startup ecosystem, and they just announced that they are acquiring Kobe's like token launchpad company.
Yeah, Echo.
So yeah, we know there's a lot of like that you can do it that way. I sort of have always wondered, like, is there a Bitcoin sort of only or Bitcoin first way to do it? And we just haven't quite seen it yet. But I agree, like, and you wonder because like there haven't been for a long time, there weren't any crypto exits for venture investors, right? It was like Coinbase is like the only venture-backed startup to actually have gone public for a long time. There were acquisitions, but mostly those were larger private companies acquiring smaller private companies, mostly in their illiquid, non-public stock, right? So like now you're seeing some hit the public market, and I think you'll see more sort of broadly in crypto privates going public. But if you're a Bitcoin-only venture investor, you have not seen exits really, and I think there's got to be some momentum the public markets are quite open even still. Even they obviously were really open months ago. You've seen a pretty healthy IPO season here, or in our case, it was an uplist. We were already public in Canada, but moving, right? Like moving to the US. I just wonder, yeah. There's a lot of Bitcoin, a lot of like Series A and B sized Bitcoin startups out there. I'd love to see some be able to hit the public markets.
Yeah, I believe you will over the next handful of years. I think you saw the first hint at it with this Bitcoin Treasury company wave falling on its face for now, but we remain to see what you call phase two. And I do believe that appetite will be there once again. Ideally, once Bitcoin's price is much higher than it is now, all these firms have demonstrated there is appetite on Wall Street for Bitcoin adjacent companies to go public through whatever means they can, reverse merger, SPAC, what have you. I think that appetite will be there once Bitcoin becomes a much more investable asset than it is today, at least in terms of its price. Alex, this was a great conversation. I think that the best way to kind of frame this up would be like a Bitcoin and markets therapy session. What on earth is going on? So I hope the audience enjoyed and hopefully got some answers or at least some direction on how to think about the confusion that we're currently feeling in the broader markets and Bitcoin specifically. If people want to see more of your work, if people want to read Galaxy Research, where can they go? Where can they find you?
Yeah, see me on Twitter. I'm an Intangible Coins is my Twitter handle. And follow Galaxy Research, GLXY Research, or read our content, galaxy.com/research. Thank you so much, Joe. Good to see you, man.